As soon as foreign investors returned to the stock market, especially in equity mutual funds in April, the portfolio of investors who had investments in these sectors started shining. Banking stocks, which were previously on the radar of domestic investors, have now become a preferred sector for foreign investors as well. As per the value research data under equity category, as of May 10, 2023, the sectoral banking funds have given returns of 26, 30% and 9% in the last 1, 3 and 5 years respectively. Seeing high returns in sectoral banking funds, investors are getting attracted towards such schemes. So, first let's see what is a sectoral banking fund. Sectoral bank mutual funds are those sector funds whose assets are primarily invested in Indian banking stocks. If the banking sector does well, these funds are expected to perform well and outperform the benchmark. Investing in these funds exposes you to a well-constructed portfolio of bank securities. Let's see how are these taxed. Since these funds are in equity fund category, these are taxed like any other equity fund. Redeeming the shares within the 1-year holding period provides short-term capital gains. Profits are taxed at 15% regardless of the income tax rate. Long-term capital gains are incurred on selling fund units after a holding period of 1 year, and these gains are taxed at 20%. Now the big question is, what are the risks of investing in sectoral banking mutual funds? And what kind of investors should consider investing in such schemes? Since these funds focus on a single industry, these carry all the risks associated with that sector. Sectoral banking funds are better suited for investors who are willing to take higher risks in pursuit of above-average returns over a long period of time. Investing in these funds provides an opportunity to invest in banking shares that have the potential to deliver good returns. If we talk about returns, mutual funds like LIC, Tata, Nippon India, ICICI Prudential, IDBI and UTI have provided returns in the range of 20 to 28% per year in 1 year. Similarly, such funds have given returns in the range of 24 to 36% over a period of 3 years. According to the founder of Investography, Shweta Jain, says, and I quote, "Sectoral and thematic funds can be quite tricky as these are extremely volatile and highly risky. Recent performance might be tempting, but it's important to stick to one's goals and invest accordingly, or one might end up losing money." Now let's see what is the way forward for the banking sector. Market experts believe that the Indian bank's balance sheet has recovered substantially from its past. The global banking crisis will not have a major impact on India's banking system. According to a research report by LKP Securities, the operating environment of Indian banks is likely to stay healthy for FY24 estimates. This may translate into stable return on asset. So, overall, stock market experts have given a positive outlook for the banking sector. However, Money9 suggests that only investors with a high risk appetite should invest in such equity funds. Further, the help of a financial advisor is also recommended to understand your risk appetite better.